Dennis, you're muted.
Okay, I'm unmuted.
Take it away.
Okay, good morning, everybody, and welcome to the Kushner Report for April of 2026, which is the beginning of the second quarter of 2026. So today, after the program, you'll have an opportunity to participate in our Q&A session. So should be very interesting in terms of our topics today. So to get started, and by the way, that's not a picture of me. I wish it was, but it's not.
Hmm.
So today we're going to talk about key economic indicators, the global economy, the domestic economy, mergers and acquisitions, and other economic news. And then we'll take a look at today's featured programs. We're going to take a look at the biotech outlook and the AI outlook for 2026. So let's take a look first of all with the biotech industry. So, following a volatile 2025, the 2026 U.S. biological and biotechnology sector is expanding materially as part of a global industry that is continuing to grow very strongly. And economists believe that the place in the global marketplace this year will be somewhere between 2.7 and 2.8 trillion dollars in the year, with North America really representing the largest share of the market. U.S. biotech alone really is forecast to be somewhere around 786 billion this year, and then we're looking at probably uh, between 12 and 14% growth in new therapeutics, genetic technologies, and biotech logic and innovation. Economists believe that the stronger forecast suggests that biotech could exceed $2 trillion by the early 2030s. So this is all good movement in this segment. Then we take a look at the cost drivers. So therapeutic engineering and therapeutic innovation, gene and cell therapies are really maturing toward commercial viability with personalized approaches gaining regulatory traction. In the area of oncology and immunization, it remains the core drivers of R&D investment and late-stage clinical activity. In the area of artificial intelligence and machine learning, AI is adopted as becoming more of a centralized theme strategically. And we're seeing that used in the drug discovery, clinical trial optimization, predictive modeling, and genomic and analysis. And therefore, and then in the U.S. biotech industry, we're looking more like the 10 to 13 billion dollar growth by the early 2030s. So AI is really shortening drug development timeframes and timelines and reduces R&D cost burdens, and it's enhancing patient selection and trial design, critical amid the rising trial expenses that are taking place today. And AI is also supporting diagnostics and precision medicine scaling. In the area of the capital markets, we expect to see a broader U.S. IPO market taking place as we move through 2026, and record proceeds in tech and healthcare sectors, potentially including biotechnology listings if conditions remain supportive. However, funding has been uneven across subsectors, with platform technologies and translational biotech startups really facing tighter venue conditions versus later stage assets. In the area of M&A, biotech and pharma merger and acquisition activity has been increasing, partly to offset looming patent expirations and broader pipelines in really critical areas like oncology and medical logistics.
Yeah, wait, excuse me. If anybody has their audio on, please mute yourself.
Okay,
Richard, yeah, thank you.
okay.
I think you're okay. Thanks.
Yeah, somebody came unmuted. Sorry about that. In the area of technology, we're looking at advances in DNA sequencing and multi-omics tools are driving personalized therapies and targeted diagnostics. Regulatory efforts will continue to expand competition and lower biological drug costs over time, and clinical trial operations and partnerships are really expanding globally. Emerging markets like China have accelerated oncology trial activity, and they're affecting investments and strategy throughout the country. When we look at the risks and headwinds facing us in 2026, some startups and academic spin-outs are really facing funding pressures due to shifts in grant levels and also venture capital allocation. And this is a potential barrier for early novel discovery. Changes in drug pricing laws, regulatory and policy factors, and evolving FDA oversight really could impact commercialization economics and the speed to market. While AI is a growth catalyst, it also introduces governance, ethical, and biosecurity risks as complex models really interact with sensitive and biological data. This is raising the calls for enhanced oversight and secure practices. So, on a global basis, really growth in international ecosystems, notably China, is challenging U.S. dominance, pushing companies to innovate faster and engage in cross border collaborations, with geopolitical tensions affecting how partnerships are evolving. But in summary, the biotech industry in U.S. remains extremely solid, and the trajectory for supporting innovation, market expansion, technological advancements, and AI integration and precision medicine and therapeutic breakthroughs are the key to long-term drivers in the marketplace. So it's going to be a very robust area for the drug industry and biotech as we move further into the to 2026. So now I'd like to take a look at the artificial intelligence in terms of where are we today. So first of all, for a number of folks that are joining us new for the first time, I want to kind of give you a snapshot of AI. So really, AI refers really to a simulation of human intelligence processed by machines, particularly computers. And these processes really include like acquiring information and rules for using it, reasoning, that's using rules to reach approximate or definite conclusions, and problem solving and perception, such as understanding images or sounds, and of course, natural language processing, which is understanding and generating uh, human language as well. So essentially, AI aims to create systems that can perform tasks that would normally require human intelligence. So that kind of gives you a snapshot on what it is. So in the United States, the U.S. market revenue is really projected to grow roughly about $100 billion in the 2020s, and nearly to $1 trillion by 2035. Large U.S. organizations are shifting from pilots, as we saw last year, to really scale deployments. And the share of companies with substantial portion of AI projects in production is really expected roughly to double in the near term. When we look at the healthcare sector, among the fastest growing AI adopters is due to cost pressure and clinician shortages. So HIPAA, FDA oversight, explanatory, and really bias concerns are really slowing full automation. So 2026 is still largely an AI augmented, what we'd call a clinician, not AI replacing clinician. In the area of financial services, such as banking and insurance and capital markets, one of the most advanced sectors. AI is embedded to the core risk and customer processes, and focusing really is on model governance and regulatory compliance and robust human in loop controls to become a central regulatory scrutinized AI driver decision. So, really a key around security. In the retail sector, widely used for product copy, creative testing, and micro segmented campaigns. We're also seeing retailers that fail to adopt AI for personalized and supply chain optimization risk margin compression and also market share. And you're seeing a lot of that happening as we speak. In the manufacturing sector, many plants still are in the early stages, and leaders run AI at a scale across fleets of assets, and laggards remain pilot bound. In the bottleneck area, we're looking at legacy equipment, fragmented IT data, and a shortage of AI, industrial engineering talent, and sensor driven models really to reduce downtime and defects. The automobile industry is similar to the broader industrial AI, plus the supply chain risk modeling. So most values come from incremental safety and convenience features rather than fully autonomous fleets. And when we look at the technology and media and telecom area, this sector builds and consumes AI. AI is really a core product roadmap. And IP ownership, deepfakes, and misinformation drive rules and content across the board. So this is another area of concern. In the public sector, analytics, you've got fraud, waste, and detection, policy impact modeling across the board. But there's going to be a strong push to modernize, but procurement risk aversion and ethics review really slow the deployment process. The priority here is to be transparent, auditable AI, and clear human accountability. In the agricultural space, it's growing but uneven. You've got large capital intensive players are moving faster than the smaller fragmented operators. The legal area and professional services, along with tax, it's deeply embedded in the workflows, but human experts remain accountable for final outputs. And there will be pressure on billable hours, for example, accounting firms, law firms, etc., to differentiate how well they can blend AI with expertise. Then we look at cost cutting, and that is from the pilots to the platforms. So organizations are moving from isolated use cases to shared AI platforms and reusable components across business units. And of course, software agents that take actions across systems and AI embedded robotics will become more common in operations and customer service. Talent and fluency. This is a critical area. So AI fluency, not just science, becomes a core skill expectation for managers and frontline workers. In the area of governance, we're looking at model risk, management and security and responsibility at the AI frameworks are no longer optional. They're prerequisites for scaling. So they're beginning to get it right. So I think that from this perspective, artificial intelligence is here to stay, and there's a lot of pros and cons about what's taking place. And we're going to talk more about that as we get into the body of the presentation. So now we're going to take a look at key economic indicators, the gross domestic product, inflation, unemployment at both the federal and the California level, and then the price per barrel of oil. So let's take a look at some key economic indicators. So essentially, we're in the early stages of the year, and the global GDP is projected to go out somewhere around 2.7%, and that's predicated on things changing in the Middle East going forward. Globally, next year, we're looking around 3%. The US this year is looking more like 2%, and then growing to about 2.2 next year. Inflation is still with us. It's still looking around the 3% total line at this point, then hopefully dropping down to 2.4 next year. As we look at the unemployment picture in the United States across the board for both 26 and 27, we're looking at around 4.4%. Now, looking at California, we're looking to go out the end of the year by 4.8%, then dropping down to 4.6 next year. Now, the price per barrel of oil, the range we're looking at right now until we see things change in the Middle East, somewhere's around $90 to $110 a barrel. And I'll talk more about that as we get into the presentation. So taking a look at the global economy, as I said earlier, it's somewhere's near the 3%, again, with a lot of uncertainty going forward. A lot of concerns about what's going to take place in the marketplace with oil in the Middle East. And if we look at the German economy, they're showing cautious signs of optimism. Growth is picking up somewhere's around a little bit over 2%, which is good. And then the economic area in terms of the European Common Market, we're looking somewhere between 2 to 2.5% growth this year. And it's strongly performance based on resilient consumer demand across the continent. Looking at the Japanese economy, it's starting to move in the right direction. They're looking at somewhere between 0.8 and 1.2% growth this year. And in China, the first quarter came out around 5%, and that's expected to start off a little bit slower, but persistent deflationary pressures and softening labor market are having an impact on their economy. Now let's take a look at the domestic economy. So first of all, the fourth quarter declined to 0.5 of a point last year. So it was a real downer after we've had some strong quarters in the prior year of 2025. More than 700 U.S. companies filed for bankruptcy in 2025. And U.S. foreclosures activity has climbed for the 11th straight month in a row. So we're seeing that taking place. It's a major concern. And then we look at the Federal Reserve decided in March not to increase or decrease rates. And yesterday, the discussions were to leave rates alone in April. So we'll see what takes place as we move into May. Now let's take a look at some other economic indicators. So for example, let's start with inflation. So inflation in March rose 3.3%, and that was predicated on the Iranian war and the energy shock around the world. So that's taking place right now, and the gasoline prices rose around 21. Actually, oil rose around 21% in March, and this is the highest level since 1967 growth rate, since this index started being calculated. In the area of retail sales, it was a jump to 1.7%. However, 15.5% in the body of context basically was based upon increase in oil prices, gasoline prices across the country. So now we're going to take a look at the labor uh, report, the jobs report that took place in the month of March. The good news is we saw 178,000 jobs created in March, and the unemployment rate dropped down to 4.3%. Couple of key sectors I want to talk about. One is construction, which is critical to the country, and that we saw an increase of 26,000 jobs. And also in the health and safety and education area, we saw 91,000 jobs. In the area of financial services, we saw a decline of 15,000. And of course, leisure and hospitality was strong, but manufacturing again is showing an increase in population across the board. So this is good, at 15,000 jobs. Now, let me preface this. The March data is not available as at this time. However, we saw an overall decrease of almost 20,000 jobs in February, and the unemployment rate remained at 5.4%. And just across the board, the key here is that we saw loss of jobs in construction, which is really key to California. And then the area of healthcare really took a hit. In education, we saw a decline of 24,000 jobs. We had a major strike, if you recall, with Kaiser, and that's been resolved. So in general, and then we saw a decline of 2,400 jobs in manufacturing in California. So February was not a good month for the state of California. So let's take a look at interest rates. As I mentioned earlier, the Federal Reserve decided to keep the rates firm. So we're still looking at an unchanged, the average is around 3.5 to 3.75%. And yesterday there was another discussion, and they're holding rates firm right now. So we're going to wait and see what happens in May. Mortgage rates dropped down a little bit, but they're still at 6.30%. Again, we're still looking at a barometer of 6%, possibly throughout the year. And that's having a major effect on the housing market, which we'll talk about in a few minutes. Good news in manufacturing. We went out at 52.7 was the index, and that's the third consecutive month of expansion. This is very good news in this sector, which has suffered for quite a while. So we're moving in the right direction in manufacturing. Again, keep in mind a lot of companies are moving manufacturing back on shore with the expansion in the semiconductor industry, with the new plants, etc. This is good news for that sector. On the area of small business, what we're seeing here is that the index dropped 3 points in March to 95.8. The average for the last 30 years has been at 97.9. So this is the first time in 30 years it's dropped below the index. A lot of concerns in the market, in the small business marketplace. Consumer confidence rose slightly to 0.8 of a point. Basically, it's still down below the 100 maximum. So we'll see what happens as we get further into the year. Crude oil price, as I said, is all over the board. So I checked this morning before our program started. The West Texas Intermediary was at $100, $104.96. Yesterday, at one time, it was at $110. So in the housing market, we saw the housing market was revised up. It was up to 3 housing starts were up to 3.2% from February, which is good news in that place. And in terms of new home sales, we saw a decline to 7.2%. We're seeing a lot of new home sales accounts for both cancellations and so-called seasonality. Now let's take a look at home sales in Southern California. In Los Angeles, the midpoint price was about 828,000, and that decreased by 1.7%. However, sales increased by 22+% from February, and sales increased by 2.2% from March of 2025. We look at Orange County. The home price there, the average home price on the market is 1,467,000. And that price increased by 1.2%. And sales in March were up by 36.4% and 1.3% over March of 2025. So very strong results in Orange County. In San Diego, the median home price of 1,050,000 remained relatively flat for the month. And we saw sales, however, were up by 20.3% and up 6.2% from March of 2025. So the Southern California area is still pretty strong. When we look at existing home sales, they fell by 3.6% in March. and that is lower consumer confidence and softer job growth continue to hold back buyers. Good news on the productivity side. Productivity increased by 1.8% during the fourth quarter, which is very good. Output was up by 1.5%, and hours increased by 0.2 of a point. So it was very good in the area of productivity for the country. Now let's take a look at company displacements. And what I do here typically is to focus on companies that we're all familiar with that have sizable number of displacements. So the last 90 days has represented a lot of shocks in the marketplace. For example, UPS and Amazon are no longer, they're winding down their relationship, and UPS laid off 30,000 people. Amazon, 16,000. Hewlett Packard, 6,000. Arby's in the food industry, 1,400. Tyson Foods, 1,700. Allianz Insurance, primarily in the travel industry, 1,800. MasterCard, 1,400. Oracle announced 33,000 over the next few months. And then we have Salesforce, a San Francisco-based company, 1,000. LA City Unified Schools is grappling right now with about 3,200 positions. And then we're looking at Block, which is in the Block Corporation, which is in the tax area, 4,000. And Meta, of course, announced 16,000, and they're starting with 8,000 in early May. Then Volkswagen, over the next 3 to 4 years, 55,000, which is significant. And then Capital One, 1,100. Panasonic, 1,100. Disney in Southern California, parts of the area, 1,000. And then, of course, Snap, 1,000. And then we had Wells Fargo from January through March, about 5,000. And then Nike on Friday announced 1,400. Microsoft announced a combination of buyouts and layoffs, roughly 10,000. So that kind of gives you an idea of what's taking place in the marketplace with most of these companies. Some of this is attributed to AI, others are just based upon revenue streams. Now let's take a look at mergers and acquisitions. Again, a very, very active market over the last 90 days. There's a lot of consolidations taking place in the market. Again, if you want to grow and you don't have organic growth, a lot of times you're looking at growth by buying another firm or divesting certain assets. The other thing is in the biotech space, we're going to talk about, you're seeing a lot of patents coming to the end, the conclusion. Therefore, there's a lot of activity to find new sources of patents and new drugs on the marketplace. So International Paper announced that they're selling their global fibers unit for $1.5 billion as they start taking certain companies out of their portfolio of marketing products. And Eli Lilly has announced that they're acquiring Ventrix Biosciences for $1.2 billion. And that's for oral treatments for inflammatory and autoimmune diseases. And then Vista is buying Energy for $4 billion. It's interesting. Vistra basically is acquiring across electric grids, which is going to combine uh, cycle gasoline turbine facilities and combustion engine facilities all over. And this is primarily in the Midwest and the Mid-Atlantic area. And HD Capital is buying One Source Stream and taking the company public for $6.4 billion. Basically, this offers software products to help executives report financial statements to regulators and investors. And Allergite is buying Sun Country. This is another small consolidation taking place in the aviation market. So these small companies fly into places like Las Vegas, St. Louis, Orlando, and then in Minneapolis is flying to places like charters to Florida and the Caribbean. So there's a consolidation taking place there. And I talked about this earlier about Elon Musk. Musk is basically merging SpaceX with XAI, and it's going to create a $1.25 trillion valuation. And he's estimating that within the next 2 to 3 years, the most cost-effective way to generate IM compute will be in space. I think Ed mentioned that earlier. And eBay is buying a company called Depop for $1.2 billion. What it's doing is adding a popular application with younger consumers online auction site in the marketplace as they want to expand their business to the younger market. And then Webster Financial is being acquired by Banco Santander for $12.3 billion. Webster has about $80 billion in assets. The buyer is located in Madrid. And then Eldorado Gold, that's a $3.6 billion mining acquisition. And what this is to create a new leading uh, player in the gold and copper industry. So we're seeing that take place. Now we look at Devon Energy is acquiring Coterra. Devon really is a U.S. oil and gas producer focusing on exploration and production of oil, natural gas, and natural gas liquids. And they're in the Delaware Basin. And the Coterra is a dependent oil company of gas and so forth, resources, and they're located in Houston. Then FedEx announced, and along with the Advent Group, is acquiring InPost for $9.2 billion. What this is Europe's largest out-of-home delivery networks with tens of thousands of automated parcel lockers across markets, including Poland, United Kingdom, France, Italy, and Spain. And then Gilead Sciences is active again. They're buying a company called Arcellx for $7.8 billion. And basically, the company is a biotech company focused on delivering a new class of innovative immunopathies for patents and patients with cancer and other incurable diseases. Anheuser-Busch is buying a company called Beatbox for $490 million. This is a ready-to-drink beverage brand of sorts of different kinds of liquors. So it'll be like Cutwater spirits, Nutra vodka seltzer, and other types of beverages that are outside the beer industry. Then Gilead again is buying a company called Oro Medicines, and it's a biotech company in the hopes of that its leading clinical drug candidates can bolster their immune system portfolio of products. Novartis is active again. They're buying Innovation, breast cancer drug company for $2 billion. And then we have KKR is selling its Cool Systems to Ecolabs for $4.7 billion. And Cool Systems basically it specializes in direct-to-chip liquid cooling solutions. Unilever and McCormick have agreed to merge, and that'll be a $65 billion deal. And basically, this will be the second largest food transaction in U.S. history. Eli Lilly is acquiring Contessa for sleep disorders for $7.8 billion. Again, another biotech company. And then Cisco US Food and is spending $29 billion to buy Restaurant Depot. Amazon is buying a company called Global Star to bolster its LEO satellite business. And what is this? This is a plan for them to boost its buys to compete with Elon Musk's SpaceX. So here we go with Amazon, another marketplace. Honeywell is selling its barcode scanner business to a company called Brady. Brady really sells barcode scanners and mobile computers and printing devices and solutions to the warehousing and logistics sectors. And then finally, Warner Brothers has been acquired by the Paramount Group, and the deal is worth about $110 billion. So that kind of takes you through the marketplace. Uh, and like I said before, there's a lot of M&A deals taking place in the biotech space. So now let's take a look at some other significant activities and business that have taken place in the last 90 days. So Amazon announced they're closing their Fresh and Go stores to focus on wholesale food products and grocery. So they're basically closing 72 stores nationwide. And this basically is a move that follows a decade of experimentation and expansion in Amazon's branded grocery and convenience stores. As I mentioned earlier, home buyers are canceling deals at the highest rate on record. Over 40,000 transactions were canceled in December. And Tesla is ending the Model S and X production, and they're going to focus on humanoid robots at their Bay Area factory. However, they'll continue to build and manufacture the Model 3 and the Model Y. And then looking at Century Aluminum for the first time in over 40 years, they're going to build a new plant, which is good news. It's going to create finally about 1,000 new jobs in Oklahoma, and there'll be 4,000 jobs created in construction as they build out the factory. This will create an opportunity to produce more than 750 tons of aluminum per year. So this is good news in the state of Oklahoma. Siemens Engineering is investing $1 billion in creating highly skilled jobs in the United States. What they want to do is scale up their U.S. production and grid turbine segment and equipment support throughout the country. This will create 1,500 new high-skilled jobs. So this is good news in that area as well. And then, of course, sentimental fans mourn the end of Minute Maid's iconic frozen canned juices over the last 80 years. So you remember pink lemonade and various kinds of lemonade that ceased. And then basically they're saying the company said we're discontinuing our frozen products and exiting the marketplace category due to the shift in consumer preferences. So as demand shifted and reduced, they've closed the industry. They've closed that aspect of the industry. Apple has made a major decision. They're going to expand their manufacturing push in Texas. This is good news for Texas, bad news for California. The Houston company, basically, they're going to expand manufacturing footprint and it's going to create thousands of jobs. In addition to that, Apple will open up a 20,000 square foot advanced manufacturing center in Houston, focused on hands-on workforce training. So for those people that are looking to go to work in the industry, there's going to be an opportunity for a lot of jobs in Texas, specifically in Houston. AI basically contributed zero to the US economy in 2025, according to a study released by Goldman Sachs. And among the companies was Amazon, Microsoft, Google, Meta, Nvidia, and other countless areas. And they're pouring tons of money into the sector right now. They have in 2025, but I think we're going to see a lot of the fruits of their investments taking place in 2026 and beyond. Long-term retailer Eddie Bauer is closed all of its stores in both the United States and Canada. There's another victim in the retail space. And then Nike recorded a $300 million restructuring charge after recent layoffs as the company struggles with their place in the market. For those of you who are involved in the motorcycle industry, Yamaha announced that they're exiting California. They're moving their headquarters out of Orange County and they're going to Georgia after 50 years in Orange County. And basically, that's going to impact 250 workers in Orange County. And Albertsons, after the deal with Kroger fell apart, basically they're closing more stores. They closed about 20 stores last year in 2025. And based on economics, they're going to be closing more stores and several in California. And GE Aerospace has announced they're investing $1 billion into U.S. manufacturing. This is more good news. They're pouring in $1 billion because the company is raising tremendous demand. Their backlog is now over $200 billion in engine orders, accelerating across commercial and defense aviation. So this is really good news in that marketplace. As I mentioned earlier, a number of Americans are losing their homes to banks, has risen now for the 12th consecutive month. And then when Amazon is also taking what they call is overtaking the postal U.S. service in parcel carrier and delivery. So Amazon posted a great month, if you will, great year of activity in 2025. Amazon handled over 6.7 billion parcels last year, and that's up for 9.8%, while the Postal Service saw 6.6 billion pieces in their market. REI, who's a well-known company for people that like camping, etc., they're struggling financially, and they've decided to cut salaries of new employees coming on board, and also across the board, they're going to reduce the cost and the availability of benefits to their employees. International Paper, good news for the state of Mississippi. They're going to build a new factory for $225 million, and it's going to construct a 468,000 square foot greenfield box plant in Brandon, Mississippi. It's going to create a number of jobs. So this will be a $1.8 billion square foot facility going forward. And Kaufman and Broad, KB Home, is joining the California exit. The company is moving their headquarters from Los Angeles to Phoenix. And again, there's another company exiting California. Now, 7-Eleven is planning to close over 600 stores in 2026. And basically, the owners, it's a Japanese company, owns the organization. They have over 80,000 7-Eleven stores around the world, which is amazing. And then finally, more than 50,000 home purchase contracts fell through in March. And some buyers are backing out after going under contract when they take a deeper look at their future monthly payments, clothing costs, and other associated payments. The key here is economic uncertainty. And then the war in Iran is really causing turmoil in the financial markets, and it continues to push up mortgage rates across the board. So that's kind of gives you a thumbnail sketch at what's taking place around the deal. So very active, a lot of things happening. So what I'd like to do now is open it up for Q&A.